Good morning, traders. Welcome to this video on the euro dollar and pound dollar. My name is Chris from Elite Currency, and let's start with the euro dollar weekly chart. Basically, price made a push up as expected and also made a bearish bounce as expected. So we had the rally here, the ABC pattern. We already had ABC pattern here, and we were looking for price to go into these fibs when putting a fib from here to here. So you can see the weekly candle having a big wick, very close the high to the 78.6 fib. And a very strong bearish close near the candle lows. That's indicating that bearish stepped in, kept control throughout last week. And also if we look at the time pattern, 1, 2, 4, 6, 7th candle not breaking this high. So I think that the bullish swing now is officially over, although that was something we already expected in our previous videos, that this swing is over and that we're going into some kind of consolidation. I think last week's weekly candle just adds a confirmation to that. Now the question is, what type of correction are we going to see? I was leaning towards an ABC pattern like this, or ABCDE triangle and then up. But I don't think it's going to be a triangle pattern. I think that the price did miss the 78.6 fib, although just by a bit. And the rejection down is too strong. So I'm leaning more towards an ABC flat with a 5-wave down, or ABC zigzag even. Well, it cannot be an ABC flat. That the retracement didn't go high enough, actually. Sorry. So more an ABC zigzag at this moment, where price could go down to the minus 272 target here at 118.44, maybe even the minus 61 per day target at 117. So at this moment, I'm bearish in the long run here, or at least no, I should say intermediate run, because after that I do expect to push up. I still think that a higher push is in the cards here. Let's take a look. And because we had a 23.6 fib bounce, so you can see the 38.2 fib very nicely lining up with the minus 61.8 target there. So I think that is 117.50. 117 is still very easily a wave 4, and there could be a bounce up, and this could be a wave 1, 2. This finished at 3, 4, and up for 5. So something like that, I think, still very likely if it stays above this fib. The 23.6 fib is a very shallow fib. Let's face it. So. The overall, the long term, the bulls are in control, but in the intermediate term, we could see a push down to that, slightly deeper fib, the 38.2 fib. All right, last month's monthly candle ended up bearish, but with a big wick at the bottom and big wick at the top. So bearish slightly in control, 2 bearish candles in a row. Let's take a look at the daily candle, and we can see what I thought was an ABC pattern and an ABC pattern, but now that price is moving down so fast. This could also be a 5-wave pattern, as I mentioned before. So I think that if we look at the 4-hour chart, we could find a 5-wave pattern, of course, there. That's a bit tricky. In this case, it could be really both, in my view. In any case, the bullish ABC, I think, is pretty clear, and that's what we expected, and that's what happened, and made a nice move up. Strong, even more so is the 5th wave we expected here. We expected a wave 4 and 5. Did bounce at the 144 EMA again in the end for a 5th wave, completing the wave 5 of C, basically up in here. And we got that rejection. The rejection, however, is just very, very strong. So that is why I think leaning towards a bigger kind of zigzag down like this, rather than, maybe a move just to the bottom, right? If it would have gone all the way to the top, then I would have expected a move to the bottom. But now I think a break of the bottom is possible. Not maybe right now, right here. On the hourly chart, we do see the strength could run out of steam. It's too close to 120, which is a psychological round level. So either here or maybe a tad lower. If there's a bear flag here on the 50-minute chart, I think a tad lower, like this, a 5-wave pattern still here. But around 120, for instance, I could see price then making a bounce up. And this could be a wave 1 and up for 2. And that wave 2 red could have an ABC in it like this, maybe back to the head and shoulders level. So let's put the resistance levels like this to indicate the zone. Put the fib on like this. There we go. And anywhere wave 2 could be deep. So anywhere the 61 or 78.6 fibs are very logical retracement levels for a downside from there. So the A up could go to the 38, then down for a higher low, then up to 61 to 78, and then down again if it is that wave 1, 2, 3. Now, alternatives, that's my main scenario at this moment, is up and then down for a 5-wave lower towards 117, 117.50. That's my main scenario, okay? But what if? So what if, for instance, price really shows a, let's take a look, shows a push-up, not in an ABC pattern like this, but just in one shot up. So it's like a close and reverse and then a flag. Well, that would certainly change things, okay? In that case, you know, we might be looking at a triangle of some sort still. You know, in that case, this could be A, B, maybe the C is short, although typically C is long, but these are just usuals. Of course, things can change. And up for D and then down for E, it could still happen. That could be one scenario, right? For instance. If price falls to 120 and then shows a bear flag, well, then if it breaks that bear flag, the bearish pressure is just too much and it could keep falling. So I think this is a spot where it really depends on, I have a certain favorite, as I already indicated, either up to this head and shoulders level or down to 120 and then up to the head and shoulders level in an ABC pattern. But I gave it maybe a 50% chance. I mean, I would give 50% chance to other scenarios like the triangle still or a down flag and continuation, that just the pressure's too much, because we are breaking below the 20 minute for the second time, and sometimes there are just no buyers and just price consolidates and keeps falling, and a kind of a downtrend really starts to resume on this time frame, at least downtrend, and can start falling down to those larger fib targets and moving averages. So I wouldn't rule that out. That has a lower chance, but definitely a decent chance that could play out. That's why it really depends on how price patterns unfold here and at 120 for me to decide how that looks like. For my own analysis to play out, I need to see a dip down and a strong 5-wave up, but not too strong, followed by a dip down. And here, this higher low, I would like to would like to buy if this ABC zigzag is taking place. I also wouldn't mind trading if there's a clear flag on the hourly chart and that flag breaks. Okay, preferably that flag appearing at 120, so I know that the 120 has already been tested. So those are really all the thoughts I have at this moment on the euro dollar. Let's take a look at the pound USD. In my analysis on Friday, a wave analysis that you can find at Elite Currency, I was talking about a wave 1, 2, wave 1, 2, 3, 4. So far, that is indeed playing out. Wave 3 went a little bit deeper here, not this low, but this low. But otherwise, we are getting that bear flag pattern right here. There we go. And respecting the 38.2 fib with a double top and respecting the long-term moving averages. So it's playing out so far. Made respected the 140 round level as well. Made about 75 pips from that zone. But the break has been not that convincing as yet. Big wicks on the 1 hour chart. Let's take a look at the higher time frames to see what's going on. Like a 4 hour chart. And I think there is space to fall. But maybe this bear flag isn't finished yet. Is my first thought at the moment here on this weekly open. So let's see if it continues like this a little bit longer. I think it will break to the downside. I don't think it's a good spot right here, right now. The break looks too weak. But if it does an extension and then breaks, or if it goes up and makes a triple top, or maybe even the 50 fib bounce, all of that looks bearish to me. Or if it were to break through this support trend line, then I think it should fall a little bit further this time and make that wave 5. That wave 5 doesn't have to go far. It could go just to a 7 here, 138.35, 138.08, and then make another wave 4, by the way. So anyhow, let's take a look at the higher time frames. That's the lower time frames. Let's take a look at the monthly chart. Bullish, but exhaustion, a bit of exhaustion, certainly so. Half of the candle is a wick. Last week's weekly candle is certainly a classical pin bar with a big wick on top, a bearish close near the low, and a bearish close that was lower than the close of the week before. So that looks like a strong reversal candlestick pattern to me. And I do expect price to go lower based on that. I think putting a fib on that candle is prudent and is conservative. There's nothing wrong with that. And looking for retracement, maybe to the 38.50 max. Or maybe just here, in fact, I don't know if it will go that deep, and it could just break last week's low and continue down to these fib targets, in my view. I think the conservative target probably being minus 60. Well, conservative target is minus 270 target at 137.80. But kind of a medium target here is minus 61.8 target at 136.50. It also has the previous highs here, which could act as some support zone there in this zone. So that seems to be the target of that. Let's take a look. Let's put the fib on properly though. There we go. Yeah, 136.70 then. So it's testing, yeah, a lot of momentum here on the daily chart, strong daily candles. So I don't expect much upside. If anything, the 50 fib, and I do think that it's going to pull back and continue down towards these targets. Maybe something like this, for instance, flag and then down again. That could complete the wave 1 or A, or it doesn't really matter, but some 5-wave pattern. Then there could be an ABC rally up again, by the way, potentially. I don't know how far this could fall. I mentioned the conservative targets. It could go further than that, by the way. So we'll update again on Wednesday. If it really falls further, if it really shows, let me say it this way. If there's strong price action followed by bear flags, it could just keep dropping. That is possible, certainly with the pound. It has that kind of behavior in my view. And it could go further than I necessarily think right now if it shows strong momentum and flags. But at this moment, I do think that these targets should be achievable, and those are targets where price might make an ABC pattern if, for instance, 4-wave 1 or A and up for 2B, and then again down, I suspect. Okay, so in the intermediate term, I do expect some dollar strength at this moment. But let's see, maybe it's maybe not as much as I think now. Let's put a fib from here to here. As I said, with the $2 too. The 38.2 fib down zone, that might be just it. Up like that, and then a bounce here, and then maybe down, and then a triangle pattern could emerge at the 38.2 fib as well, by the way, So gotta be realistic about what the reversal could generate. That might not be that much. It might just indeed be that 137.50 zone and then up again. So yeah, that's it. One more thing, I guess. Our website here, elitecurrency.com. I mean, there are a lot of things to look at, but one thing I want to emphasize is the webinars. There's a live webinar coming up tomorrow. I'm going to share my scalping SWAT EA made by Carlos and I, our programmer Carlos Codera and I, and yeah, it's exciting. So check that out. Check that out. Here, automated trading trading briefings, all right? And of course, if you're interested in my methods, feel free to check out Tools and Strategies, my SWAT ebook, or my SWAT method. But yeah, the scalping EA looks very promising, so check out that webinar specifically, all right? We show great trading, and see you on Wednesday or later today. We also have a wave webinar, by the way. Cheers, bye-bye.